First comment has to be semantic. Manipulation is part of a free market. And anybody who doesn't believe that manipulation is part of a free market is mistaken. Prohibitions against manipulation.
There's another theme here that's, it must be almost a fourth of the questions that were submitted are all around whether or not the silver or gold markets are free markets on the COMEX and LBMA, or whether there are other forces that are not free market forces that are affecting. Some people call it manipulation, some people call it suppression, some people call it all kinds of things. There's lots of stakeholders in that drama. Miners are certainly one, holders of stocks in mining companies are another, holders of physical precious metals are others, on and on and on. You are close to a lot of those stakeholders. What's your personal view, just in basically lumping about 20 questions together into one, of whether or not the silver and gold markets in particular are in fact freely traded markets, or is there more going on that affects the price of those metals than the free market?
First comment has to be semantic. Manipulation is part of a free market. And anybody who doesn't believe that manipulation is part of a free market is mistaken. Prohibitions against manipulation are unfree. I'm not defending manipulation. I believe that all markets in the near term are manipulated. If a market as large as the LIBOR market or the U.S. Treasury market can be manipulated, and it's been proven that they have been, obviously markets that are as constrained as the silver market are much more easy to manipulate. I am not a believer that there has been a 10-year or 20-year or 30-year effort to manipulate precious metals market prices lower. That was happening all by itself. We had a 40-year decline in inflationary expectations from 1982 to 2022, simultaneously with a 40-year period of increasing strength in the U.S. dollar and declining interest rates. Why would someone strive mightily to knock down the price of precious metals when the markets were doing it for them? That doesn't make any sense to me. But manipulation by trading desks takes place all the time. And imagine the opportunity for mischief, as an example, in the silver market, where the futures markets trade between 1 and 200 times per day the amount of silver available for good delivery to cover. Imagine, if you will, the mischief that could be caused by a desk looking at the long futures markets in silver, establishing a leveraged short position, and then engaging in an aggressive selling campaign in the spot market to lower the perception around the future. Imagine what you could do, and of course I'm making this up, Donegan, if you had a $2 billion short position out over 2 or 3 years in the futures market, and then you borrowed in the very short term and flooded the market with $60 or $70 million worth of silver overnight when the markets were their most illiquid. If you could lower the spot price of silver by 3% or 4% or 5%, it is not unlikely that you could lower the futures price by a like or greater amount. And if you're using 10 or 12% margin in the futures market, help yourself to a 50 or 60% gain. That type of manipulation, that type of arbitrage between stock to float and between long and short-term markets occurs all the time. And to believe that it wouldn't occur in the precious metals market is naive. I myself remember when there was aggressive manipulation in the physical gold and silver market to the upside during the decade of the 1970s, using the same shenanigans. Understand that the manipulators are traders. They don't care about the direction of a market. They care about the dimension of the move and whether or not they can cause it to occur. So yes, gold and silver markets have been manipulated from time to the downside for the last 40 years because it's been an easy thing to do. And my suspicion is that 2 or 3 years from now, they'll be manipulated continuously to the upside because that's the easy thing to do.